Good morning. I'm Malcolm Grahamwood. I'm here at Core Finance for my usual CEO interview. Today, my guest is Robert Bose, CEO of Sintana Energy. Good morning, Robert.
Good morning, Malcolm.
It's been great to see you.
And you.
I've been looking forward to meeting you for a long time, and I know a lot of the viewers are as well.
Thank you.
Before we go any further, Sintana is only a part of it. You're a real pluralist in modern jargon. You're principal and managing member of Charlestown. Is it Charlestown or Charleston?
Charlestown.
Charlestown also. Charlestown Energy Partners, where you're focused on making investments in energy and commodities across the board. And you have an acknowledged interest in the conjugate margins. You're also a non-executive director with Challenger Energy Group. I wonder, before we start, particularly for those people who might not know too much about it, especially since that's where a lot of our interest is going to lie today, is you could give us a background on what the conjugate margin really is.
Sure, I'll do my best. And first and foremost, thank you so much for having me this morning, Malcolm. I truly appreciate it, and to your viewers as well. And it behooves me to preface this by telling you, I'm not a technical guy, so I just get to sit in rooms with a lot of smart technical people. So I'm, to some degree, just parroting what I hear from them. The conjugate margins is a geologic framework which alludes to the idea that in sort of prehistoric times, South America and Africa were one. And then in the context of sort of the rifting of the continents as they separated, the geology and subsurface realities offshore from each of those continents would mirror each other. And so the effect of that is the idea that some of the significant resources that are found, for example, in offshore Brazil, would be replicated in complementary basins in offshore Africa. Right. And so a lot of the analogs in the places where we spend time, in Angola, in Namibia, in South Africa, are replicated on the other side of the Atlantic in Brazil and Uruguay, as an example.
Perfect. And I'm going to come back to Uruguay later, but thank you very much for that. Let's have a good look at Sintana.
Sure.
I've been following Sintana for a number of months. To begin with, it didn't necessarily fit my book because it's not quite in London, but there are a lot of people who have watched it very carefully, and you have a number of investors over here, and they like the story, and it's very easy to understand why. It's been a success story of our time in recent years. There are plenty of big companies down there, but Sintana has been the sort of magic play. Why don't you tell us how it started, how you got involved, and a bit about Sintana and where you are now?
Sure, absolutely. And I'll try and keep it relatively succinct. So as you alluded to, Malcolm, I manage a private investment vehicle called Charlestown Energy Partners. It is warehoused within a family office in New York. Our investing strategy is very focused on exposing high impact capital to asymmetric returns. We're looking for opportunities to deploy capital that has very significant upside. We were introduced to Sintana in 2019. At the time, Sintana's only asset was an interest in a joint venture in Colombia. Sintana had acquired a portfolio of licenses there, had winnowed it down to one, had executed some geoscience, and had farmed out a 70% interest in that block to Exxon. In exchange for operatorship and the 70% interest, Exxon committed to fund approximately $150 million in exploration and appraisal expenditures on that block before Sintana would have to contribute any capital. And so there were three things about that that we really liked. One was the partnership with a super major that had both the technical and financial capabilities to really move the ball forward. Secondly, the fact that there was very significant capital support to get to those finish lines. And thirdly, Sintana at the time was a $20 million company.
Yeah.
Malky, our attachment point was very low. There was very little capital required, and we saw a tremendous degree of upside. And so we got involved in Sintana, as I said, in 2019. Over the course of the next few years, it sort of became clear that as exciting as Colombia was and the opportunity in unconventional and Middle Magdalena Basin appeared to be, and by that point, Exxon had drilled a $60 million, 14,000-foot vertical well. They had cored and logged it. It returned very attractive petrophysical and resource outcomes. So it was all very exciting, but it became clear the risk was overly concentrated. We had just been poking around looking at other things and other opportunities, and had been sort of introduced to Namibia sort of just through a couple of different things that we had looked at. In June of 2021, we were introduced to a Namibian entrepreneur whose name is Knowledge Kathy. So Knowledge had previously had a portfolio of licenses, had put them together, had sold them to a Brazilian company called HRT, sort of successfully monetized that exposure. By the time we met him, he had sort of reformulated his strategy again through another holding company that owned interest in 5 licenses. The thing that we found very interesting about the portfolio was its exposure to what felt at the time to be a very potentially exciting and emerging geography. Shell and Total had both arrived in country.
Yep.
They had been very active. There had been a long dearth of any exploration success, but the basins were underexplored and there was an emerging level of activity. But secondly, the portfolio had a lot of the hallmarks that got us interested in Sintana in the first place. There was partnerships with multiple operators, with significant carry. Very little capital was going to be required from the Namibian entity to move the ball forward. So again, low attachment point, partnerships with majors, and very little capital required. And so we entered into a transaction in October of 2021 to acquire a minority interest in that company. By the time we completed that acquisition in March of 2022, each of Shell and Total had announced their basin opening discoveries of Venus and Graff. So it was, I would love to tell you, Malky, there was a tremendous amount of skill in the timing. But so, they say chance favors the prepared mind, but, the timing was very good.
Yeah.
And so in the intervening period, there's been 18, 19 wells drilled in the basin. There has been success rates in excess of 80%, both in exploration and appraisal. Approximately 20 billion barrels of original oil in place found, of which 10 billion come from Mopane, which is located in PEL 83, which is a block we have an interest in. So it has been just an absolutely, a fun, fascinating, and good time to be in Namibia.
Excellent. So talk us through this world-class find. I mean, I'm told that it's got great light oil and it makes it easier for refining and lengthens the life of the field and so on. Value per barrel, $10 a barrel. I mean, normally in my 40 years in the business, I'd say, still in the ground, still, underexplored. I mean, it's there, but $5 a barrel. But this is looking so better than that. I mean, it's got all the P's. It looks good. So how excited are you in terms of recovery factors? And you've mentioned it's sort of 10 billion barrels, and that appears to be the 10 to 12 I've heard a lot of, but say 10. Talk us through how exciting it is on a technical level, and that's just PEL 83. I mean, Mopane, isn't it? So
yeah, no, absolutely. So that's
and of course, Gulf are farming a bit out.
Correct. So a couple of different things. So as you allude to, Mopane is just one element of a much bigger license. It's located kind of in the southern half of the license. The license is over 11,000 square kilometers. It has an entire portfolio of additional prospects and leads. That license was previously operated by HRT. They did significant work on it. Galp has done significant work on it. So certainly the opportunity at PEL 83 transcends Mopane. Mopane is certainly the main event at the moment. So I guess, a couple of comments. I think in terms of level of excitement, it is one of the largest, most significant finds globally in decades. So it is very exciting in that regard. The 10 billion barrel original oil in place equivalent number was an estimate of the sort of totality of resources across an inventory of over 30 AVO anomalies, 3 of which have been explored and appraised, and 2 of which have been explored. So certainly Mopane overall is sort of bigger than just the handful of things which have seen some progress to date. I think it's been a little bit of a challenge because Galp has been quite cautious about the level of detail that it's been providing. Certainly publicly, there's been a lot of sort of qualitative disclosure about the qualities of the reservoir, as you allude to: good permeability, good porosity, a high quality light oil, significant sands. So, from that perspective, directionally, it's very good. They had been quite circumspect in terms of providing a lot of quantitative detail. This 10 billion barrel estimate was provided upon completion of the first 2 of the 5 wells that have been drilled. There was a flow test done at the time, flowed at an infrastructure constrained rate of 14,000 barrels a day equivalent. So it certainly has set itself up very well to be very excited about. I think one of the challenges for investors across the board has been kind of the lack of continuous detail and the ability to quickly reconcile some of these early insights into the progress. And I think that goes in part to the fact that there is a farm out process going on. They want to be very cautious about the relationship between public disclosure and that M&A process. Now, we saw, as part of their annual report released just yesterday.
I was looking at it.
They had put out some initial contingent resource numbers just with respect to the first 3 anomalies and only really kind of 2.5 wells.
2 really.
I
mean, I had a chance to look at that yesterday, but I was tipped off that it was coming out, and over the day when people started to look at it, I thought 2 things. First of all, I thought, because it's the 24 annual report, it goes back and it doesn't do anything since. So some of the most exciting news is not in the picture, and only the first 2 AVOs really counted in that. So actually, your net of that would be 700 million barrel. I mean, they put in 700 million barrels in that figure, didn't they? But it wasn't,
So the 700 million barrels recoverable contingent resource from the kind of, call it 2.5 wells. So I think the DeGolyer-McNaughton cutoff date, those are the reserve engineers for folks who don't know, was November 30th. And so not all of the data from the 3rd well or the 4th and 5th well certainly were part of that exercise. So there remains additional data to be incorporated, and so potentially upside on that estimate. The other thing I would say is the 700 million is net to Galp's 80% interest. So if you gross that up to the sort of 100%, it'd be about an 875 million barrels of contingent resource, of which we would be 10%.
So 10% of that net to you, your net, I mean, dwarfs the amount of your market cap still, doesn't it?
Sorry, and I should be clear, the 10% is net to our Namibian, yes, of which we are 49%. So, but yes, it dwarfs the market cap. I think to be frank, Malcolm, is anybody who's kind of looked at the stocks and is just generally following the markets these days, particularly as it pertains to kind of exploration, it's been a challenging kind of quarter and change in Namibia in particular. Shell wrote down a significant portion of its assets in country. Both Total and Chevron drilled non-commercial locations, of which we were a part of the Chevron wells. That is certainly not as much fun as a big discovery. But I think it was a healthy reminder about the nature of the business and what it's really like. And so I think that's been a challenge, and that's put some pressure on the stock. But I think at a fundamental level, I mean, the asset continues to blossom, and we're really excited about where it's headed.
I'll come back to that in a minute.
Excuse me.
But just in terms of politics, there's been a change of government in Namibia, and the lady who's come in as president has taken responsibility herself, which I'm told by you and others is a good thing. And even in South Africa, which had been struggling with organizations trying to go up against it, they're beginning to be more positive too. So the political side of it looks quite a lot more positive. And in terms of the companies that are coming in, whilst you say that Shell, obviously they wrote down a large amount of their previous discovery, they are still, rumored to be speaking to Galp and in the data room there, as are Chevron and so on. So how much of Galp's stake are they rumored to be farming out?
So the idea is, so Galp currently has an 80% working interest in the block. Our Namibian affiliate has 10, and then Namcor, the national oil company of Namibia, has the other 10. Galp currently wears 100% of the cost. They carry both of us through to first oil. What they have, sort of discussed is farming down half of their interest, so going from 80 to 40, in exchange for whatever development carry and upfront consideration plus operatorship.
Yeah.
And so the farm-in discussions are very focused on a handful of people that have, again, the technical and financial resources to move a world-scale development like this forward. Total has, on their Venus development, which sits in one of the offsetting blocks, has been moving very quickly to provide some detail. They just launched their environmental sort of community solicitation process, that contemplates, subsea infrastructure, including 40 wells, in almost 4 kilometers of water.
They are the big player down there, aren't they?
So that is a very big project. And so the thing that's exciting to me about seeing the progress on the Venus project is Mopane sits in less than a third of the water depth, and also is probably half the distance to shore. So all else being equal, the commerciality of Mopane should be superior by comparison. So that said, it's going to be a big check, Malcolm, whatever it looks like. And so having the ability to deploy $7 to $10 billion in development capital plus oversee and execute, something between 4 to 5 years of development, including warehousing the totality of geologic, operational, financial, technical, and inflationary risk is really the province of a handful of people. And so
this well has proved that it's a separate, distinct find, field, hub, call it what you like. So that's incredibly good news as well. That's crucial what you've just been saying, because whilst I was doing some research for this interview, I spoke to a number of people, and I spoke to a number of people about yourself. And it was all, let me tell you, it was all very positive.
People are generous, but
one of the guys said, actually, with a fantastic portfolio of assets, and not just here, but at Challenger and various other things, they say that Robert's biggest problem is actually monetizing 600 million barrels of oil, or put another way, discovering it turns out to be quite straightforward. Now you've got to you've got to monetize it, and you're already finding that the value of Cintana is way below that. So it's going to be an exciting time, and you've got PEL 87, where Woodside were a partner there, and they're also moving out. It's been well documented that they would more likely be players in big LNG projects and everything else. So tell us about the PEL 87, the Woodside, that they're going to be new partners there as well.
Yeah, so for the audience, and just to sort of maybe set a bit of the table in terms of some of the details. So our Namibian affiliate actually applied for the license together with Pancontinental, the Australian company that operates it, back in 2016. I believe it was in October or November of 2022 that the joint venture entered into an agreement with Woodside. And the upshot of that agreement was Woodside was required to pay for essentially a 6,600 square kilometer 3D seismic shoot over something called the Saturn superfan, which is sort of the principal and at least initial sort of geologic feature that underpins PEL 87. It is a almost 2,400 square kilometer, just at its core, subsea fan complex. I think in total it's almost 5,000 square kilometers in size. So it's one of the largest subsea fan complexes globally. Prior to the 3D seismic work that was funded by Woodside, this feature had only been mapped on 2D. So we entered into agreement with Woodside where they would pay for this. And upon delivery of certain of the geoscience work products, they would have the option to farm in. So they moved actually extremely quickly, Malcolm. We entered into that agreement, as I said, I think in November, something like November of 2022. By March, they had completed the 3D acquisition. Like Chevron had been shooting 3D on our other block with them in the Orange Basin, and the ship moved immediately to PEL 87. I think that sheet was completed, as I said, either in March or in May. So there was a very sort of highly responsive, high velocity acquisition campaign. That was then followed by almost 2 years of analysis by Woodside. And as you alluded to, I think there was a couple of things going on in the background. The scale and complexity of Saturn really only became clear with all of that work.
Yeah.
It is an enormous thing. It's not one thing. It's an enormous constellation of things.
Yeah.
And so that really only became clear in the intervening period. And quite frankly, Mopane hadn't even been discovered when they actually entered into this thing. So the level of kind of basin insights and the scale and scope of this were really only kind of products of the work in that 2-year period. But that 2-year period was almost twice as long as was initially expected. And so I think what we had happen was Woodside stepped into it with a high degree of enthusiasm very quickly. They did a lot of work very quickly. The scale and scope of this became clear only with the passage of time. And as well in the passage of time, their focus on the LNG business, the continuing reiteration of their sort of capital allocation framework around kind of 15% IRRs and 5-year paybacks does not really go with the exploration business. And so to some degree, the writing was a bit on the wall, Malcolm. And so what that has allowed us to do is to clear the decks. Pan-Continental as operator, together with our active support, has initiated a process to farm that down. And as you would expect, the sort of cast of likely participants are all of the people that are either in basin or have the ability to.
Yeah, I mean, obviously, Total, Chevron, Shell, the Brazilians always come up. I found it quite interesting recently that apparently BP, who are also in other groups, but apparently BP have got a team at head office looking very carefully at whether they get involved in this on a direct basis. So I don't expect you to comment on that actually, but it's most interesting. And with finds nearby, I hear Rhino have had a good find, or maybe a second good find. The area is so exciting.
Yeah. There's it's seen so much progress so quickly. And I think, it's, as I said, it's been a challenging kind of quarter and change, but looking ahead, there's so much left to do and so much left to be unveiled and a lot of progress at different states of maturity. Like, we're seeing Total move Venus into development. Mopane will hopefully see after a farm out move into development. But yet, those are just, a handful of wells in an enormously underexplored basin. And then that doesn't even sort of contemplate the broader kind of multi-basin opportunity in Namibia. As you may have seen, and some of your viewers may have noticed, we farmed out one of our licenses in the north to Chevron. And, they are really excited about that block. It's probably one of the most advanced
This is the Walvis Basin.
This is the Walvis Basin block,
I've heard a couple of exciting things about that recently. I remember looking at this 10 years ago and thinking, sort of maybe not. And then all of a sudden now, and that comes back to conjugate activity as well, as I understand it. Well, thank you for that.
Of course.
Just on Mopane and Sintana. But as I said at the beginning, you wear more than one hat. And I wanted to have a talk about Challenger, where you're on the board. It's a very exciting company in my view. I mean, I've known ASAN for a very long time. I covered it very carefully when he arrived on the scene and what they decided to do. And the viewers will know a lot about the background and everything else. But before we talk about your involvement with Challenger and so on, you mentioned Uruguay and Brazil in your comments about the conjugate margin. Tell me about how you think that's important in those two countries in South America.
Sure. So, our sort of predominant initial exposure has been on the West African side of the conjugate margin. But that has given us opportunity and occasion to work with and partner with technical resources that have insights into kind of both sides. So we can use, for example, the team that diligenced our portfolio in Namibia to look at things on the other side of the margin and sort of draw the analogies for us. And if you look at ATAN has their corporate deck is fantastic. And there's a really interesting map they have in their corporate deck, which shows at the point at which the continents were together, how the various basins connected with one another. and the Pilatus Basin and the Uruguay exposure very much connect. Like the complementary basin is actually walrus. So that's been really interesting because, as I said, we have the partnership with Chevron through Sintana in the Walvis Basin.
Yeah.
And then, here they appear in Challenger. So that's been exciting.
You saw Eitan presenting and at a conference somewhere, and you liked the look of it. You called him up and said, "Yeah, can I get enrolled?" And he said, "I'm a bit busy at the moment." But then you came back when they'd announced the Chevron farming on off one.
Indeed, no, that's absolutely correct, Malcolm. I saw him here in London. He was presenting at WECA, and this was in November of 2023. Yeah, November of 2023, and Challenger, like many other sort of companies focused on kind of the international business, had a couple slides in their presentation about how their portfolio was very similar to what was going on in Namibia. And so I thought to myself, well, I have a portfolio in Namibia, so let's see how real this really is. So I was able to connect with him shortly thereafter, and he said, "Listen, we're working on a farm out transaction, and let me come back to you." And then the day that they announced the farm out to Chevron, he called me that day, and he said, "I don't know if you saw, but we farmed our license out to Chevron." And I was like, "Well, that's fascinating," because unbeknownst to him and most other people, we had started talking to Chevron about our Walvis Basin license. And so so I said, I'd love to get involved. And he said, we are very focused on sort of keeping a stable and calm ship while we complete the farm out. So, the only thing we could use a little bit of right now is some working capital to bridge us between kind of this point in time and completion of the farm out. And, I said, that's the kind of business that Charlestown is very much in. It's how we build a portfolio. We'd be thrilled to provide that. And, if you'll have me, I'd love to be a bigger part of the architecture. And sort of he agreed to that. And in the course of sort of putting that all together, Malcolm, we were able to, as I said, use the same technical resources.
You used your team. That's what from Namibia to look at off one and presumably looking at off three as well. I mean, to
some degree,
in a sort of sideways.
Because to some degree, like as a just investment underwriting matter, again, and this is kind of true of, I think, there's so much upside in that stock, and it's a really interesting story with a lot of very large catalysts ahead.
Tell me about upside, because when the shares were 2.5p, I was one of the few people following it. I had a target price of 25p, and only recently, all of a sudden, brokers and highly respected brokers are coming out. I see Stifel, I don't know, with a target price of 50p now. So mine has been blown out of the water, but
always room to raise it, Malcolm. But
so you carry on,
So one of the things that so there's a couple of like very significant things about Challenger, I think, in terms of value creation that are exciting. Challenger retains 40% of the license that Chevron farms into. Yeah. So to some degree, in some contrast to Sintana, where we have somewhere between net to us 5 to 7.5% of these licenses. Now, admittedly, we've got a portfolio that's been a tremendous amount of progress. Sintana is just different, but the retained interest in off one in of itself is significant, and the ability to farm that down further and create value in excess of the existing market cap seems very possible to me. So that's exciting. And that's just one license. And then off three, the process to farm out off three should begin sometime mid-year.
Yeah.
That is, and Uruguay has 7 licenses. 5 of them are owned by super majors or majors. Yeah. The only 2 that really have some availability are the 2 that Challenger have. We've now got, the partnership with Chevron on 1. There's a high degree of interest in off 3. So I think over the next, 4 to 8 quarters, there are many opportunities for Challenger to appreciate. So
I understand why you've understandably been quoted as saying that the Challenger is a core part of the Charlestown portfolio.
Yeah, absolutely it is.
And the area, you might be having a further look at, along with a lot of other people. So I know that I've spoken to Eitan about this a lot, and it's a busy year with so much, and so you've got a big enough stake, 8 or so %. we noticed that Morgan Stanley have been announcing in recent months that they've gone up. I think they're just over 8% now, 8.4% or something, which would indicate to me that, first of all, that, the US investors are to a certain extent following Charlestown in because they like what they see. Partly their domestic Chevron is, I know what they've done here. And so, there are a lot of positives for the company and for the parts of the world.
I agree. I completely. And I think, it's so hard for me to add value to any situation. But, one of the things that was very easy for me to do from a challenger perspective was to connect the dots with some of our significant Sintana shareholders to that situation. Sort of our leadership, our exposure to that, I think helps kind of foster just an increased following, if nothing else. So, it's really, really exciting.
Fantastic.
We don't own enough, to be honest with you.
Before I let you go, because time's nearly on us, I note that you were going back to Africa here, but you've shown interest in Corcel, which is another of the companies which I've been watching from a very small start in the last year or so. Angola onshore Con16, which they took the mickey out of me when I said it a few months ago. I thought Con16 was the core block there. You've been involved in the raise, they've had a couple. Tell us what it is you like about them and what you particularly. One of the things I like about it is that the potential value is very high, isn't it?
Absolutely. So sort of, hearkening back to, the beginning of our conversation, we really do look to deploy capital that is exposed to very convex outcomes. I mean, the potential value of just Con16 alone is in the bookends of kind of low and high cases is many multiples of the existing market cap of Corcel. I mean, I'll tell you that what I like about that situation, probably first and foremost, is the management team. I mean, both Scott, the CEO, and Geraldine are absolutely fantastic.
Yeah,
they are
easy. Me too. Yeah.
I said to them both, every so often you meet a management team and you just want to back them.
Yeah.
They are the poster child.
I couldn't agree more.
Yeah. They are just absolutely fantastic. But in terms of, the assets, and, that is a portfolio which is in a state of positive evolution. They, have had the exposure in Brazil, the recompletions have been successful, so that's great just to create cash flow and liquidity. But Con16, just to, in a snapshot, previously operated by Chevron. Chevron drilled a well in Con16. It encountered working petroleum systems both at the post-salt and pre-salt level. So again, kind of hearkening back to the conjugate margins, all of the large kind of Brazilian oil fields are underpinned by these kind of pre-salt opportunities. And so in Angola, onshore in the Kwanza, those geologic characteristics are present. And so even if they're just able to replicate the post-salt, so the shallower, sort of smaller accumulations, it's multiples of the market cap. And then if there is an ability to get back to the pre-salt and show those kinds of accumulations, it's the kind of home run we're looking for. So
it really would be a home run, that, because it's it wouldn't be not a 10 bagger, but a 110 bagger or more, because the numbers are potentially there. It looks so good to me as well.
I wish I hadn't been telling such a positive story. We need to buy more before I keep talking about it. But it's a very exciting situation.
And it's very early dours.
Very early doors, but really interesting.
I said we were coming nearly to the end of our time, which we are, I'm afraid. But I always say to my guests at the end, to just do a little wrap up of where you'd like to see your portfolio of interests in Africa and in South America. So where would you like to see things in, say, 18 months' time, Robert?
Well, I think, our portfolio is growing, Malcolm, and its exposure is evolving in the sense that, today, for example, Sintana is a portfolio that includes interest in a very large discovery, plus a number of other exploration catalysts. We've got other things like Corcel and Challenger, which are at the very early stages of kind of the emergence of new frontiers and new opportunities. And so, particularly, given the world we seem to be living in over the last few days, which we don't need to talk about too much, sort of portfolio management is critical. And so I think being able to sort of realize on some of the significant progress we've had while continuing to build the portfolio to continue to extend the runway, to have the kind of exposure that we want is really what I'd like to see. So We expect significant progress in Namibia on the farm out side, both at PEL 83 and PEL 87. And then there's a couple other things going on there. And then, Challenger will continue to move the ball forward. So in all honesty, what I'd really like to see, Malcolm, is a broader macro environment that makes it easier to, make capital allocation decisions, because
we can all understand that.
Yeah.
Robert, thank you very much for your time. Really appreciate it.
No, thanks necessary.
It's been great to meet you and to hear a lot about your portfolio. So I've been Malcolm Grahamwood on Core London today in the studio with Robert Bose, CEO of Sintana Energy, as well as managing member and principal of Charlestown Energy Partners, and of course an NED at Challenger Energy Group. It's been great to speak to Robert, and thank you very much to him for participating, and thank you all for watching. See you next time. Bye now.